I'm still super focused on the time horizon of right now is where I think the business cycle sweet spot lies, which is growth recovers, inflation remains low, and it starts supercharging my secular themes, which are technology and crypto. Both benefit from debasement of currency, the added liquidity, but in addition, there is this exponential age of technology that's playing out, and the adoption effects of that, of which probably AI is the fastest, but it may not be. Who knows what else is coming? There's a lot coming. The robots are coming fast as well. We've got lots going on there. And then crypto, which is actually part of the same thesis, has been on fire as we've got, the ETF flows driving things. But really what that is all about is adoption. So we've got new technology adoption, which has been growing in a secular trend. And then it gets exponential every time you add the business cycle to it. So I'm really, really hyper-focused on that. If I look at, and just to tie in something Angus has looked at as well, I've gone through kind of every market versus debasement.
Don't forget to subscribe, crypto traders. Let's continue with the interview and the analysis of this one.
This dividing things by the Fed balance sheet. I think Geordie and Angus, I've shown you this before. This you divided by the Fed balance sheet. There's only one emerging market that actually comes out to be growing, which is again on the same basis of demographics and deflation as India. So you've got, a very limited emerging market set that's really working, and a very limited set. But those three markets alone are giving you enormous returns. So I'm super focused on that.
Market analysis involves evaluating various factors to understand the dynamics and potential of different markets. One key aspect is comparing markets based on debasement and Fed balance sheet ratios. Debasement refers to the reduction in the value of a currency, often caused by excessive money printing or inflationary policies. Fed balance sheet ratios indicate the Federal Reserve's monetary policies and their impact on the economy. In assessing markets, it's essential to consider emerging opportunities alongside established ones. India, for instance, stands out as an emerging market with significant growth potential. This potential is fueled by several factors, including demographics and deflation trends. India's demographic profile, characterized by a large and youthful population, presents a favorable environment for economic expansion. A young workforce can drive productivity, consumption, and innovation, laying the foundation for sustained growth in various sectors. Moreover, deflation trends in India contribute to its attractiveness as an investment destination. Deflation, or the decrease in general price levels, can stimulate consumer spending and investment as people anticipate lower prices in the future. This trend encourages economic activity and fosters investor confidence in the market's stability and growth prospects. By examining these indicators, investors and analysts can gain insights into the comparative advantages and potential risks associated with different markets. Understanding debasement and Fed balance sheet ratios provides a framework for evaluating economic policies and their implications for investment decisions.
So let's say you're right, is that people don't value businesses correctly anymore, and Geordie's right that, let's say, the business cycle is structurally shifted. That sounds like it's going to be an extremely positive backdrop for markets that most people don't understand. Last year was a typical market where nobody understood what had happened. But really what you're talking about here is kind of a change in how people approach markets and economies, and people haven't got to that understanding yet. So maybe that's one of the reasons the markets were so ludicrously strong last year. You just need the Fed to take its foot off the neck of the market, and before you know it, this kind of beach ball shoots out from underwater because things have changed.
In recent times, there has been a discernible shift in how we perceive and understand the market landscape. This shift isn't merely a fleeting trend, but rather marks a deeper structural transformation in the way businesses are valued and economies are approached. Speculation abounds regarding the positive backdrop that underpins this market evolution, pointing towards fundamental changes that are reshaping our traditional paradigms. One of the key insights emerging from this shift is the recognition of a changing dynamic in how people assess market conditions and economic trajectories. It's not just about looking at raw numbers or historical trends anymore, rather, it's about delving into the nuances of market behavior and understanding the underlying forces driving valuation. Last year's robust market performance serves as a testament to this evolving market understanding. The gains witnessed across various sectors and asset classes were not merely a stroke of luck or a temporary anomaly, but rather the result of a deeper comprehension of market dynamics. Investors and analysts alike have begun to grasp the intricacies of market sentiment, the impact of technological advancements, and the significance of macroeconomic trends in shaping investment decisions. As we navigate through this period of transition, it becomes increasingly clear that old models and conventional wisdom may no longer suffice. The rules of the game are changing, and those who adapt to this new reality stand to benefit the most. It's no longer enough to rely solely on historical data or conventional wisdom. Instead, one must be attuned to the shifting currents of market sentiment and be willing to embrace new paradigms of thinking.
We grew up in a world where businesses were financed by debt. The General Electrics of this world and all of these, they were debt-financed businesses, and interest mattered. Basically, the entire leadership of the S&P 500 has never had a single debt in its life. Or if it does, it's just for cash flow management purposes. And they're all equity-driven. Everything is equity-driven now. If you think of, all of the VC business, that used to be your local bank. You'd have to beg and say, I'm setting up a new business. Now we call it a startup, and a startup actually means equity-funded thing. And therefore, maybe the business cycle matters less. Angus, what are you seeing? Because a lot of the tech companies, stuff like that, there is a difference between people who borrow money and people who don't. I also think businesses will rise and fall much faster. Like, I was using recently Otter AI to do, when you're on a Zoom call, it transcribes it, gives you some notes. Zoom, we started using the Zoom one, it's like 10x better. That's the end of Otter. And we're seeing this happen at a scale because people are now using AI to build the AI, to build the business, to build the AI. And it's like hyper fast. I'm worried that venture capital will never be able to capture money in this environment. Sure, in some areas, of course, but in some of the really fast-moving areas, we've seen it in blockchain. It's been really hard. An ICO market seems to be more effective because it can trade for 6 months and be worth a lot or nothing, and it's okay. But I'm not sure the VC survives this.
Do the hardware?
It's almost
I'm
like
reading a random book that both of you would probably enjoy, and you wouldn't think you would. Is Yanis Varoufakis, the kind of Marxist intellectual economist.
Yeah,
priest.
He's got a book called Techno-Feudalism, and it's bloody interesting because his view is these platforms like Amazon, Twitter, Apple, all of these, they are now a feudal-based system. They're not capitalist because it's all rent-taking. So you're a rent-taker in the middle of the system, and if you want to operate in that world, the feudal landlord takes his fees. And I think it's the same in tech hardware. That's where it's going, is like, there's literally the barriers to entry are so high, it's almost impossible, of which Taiwan as a country has a barrier to entry so high, it's almost impossible to deal with, that they become feudal landlords of the hardware. It becomes very interesting, and maybe the serfs in the bazaar trading things are all of the software companies in the end, when it used to be a software-owned world. There's something shifting here. I don't know what it is.
AI advancements have significantly transformed various aspects of our lives, bringing forth both opportunities and challenges. One notable area experiencing the impact of AI is in transcription technologies, with tools like Otter.ai leading the way. The increased use of AI technologies, such as Otter.ai, for transcription purposes has revolutionized how we capture, store, and utilize spoken information. This innovation enables individuals and organizations to transcribe audio recordings into text efficiently and accurately, saving time and resources while enhancing accessibility and convenience. One of the primary advantages of using AI-driven transcription tools like Otter.ai is their ability to process large volumes of audio data rapidly. Unlike traditional manual transcription methods, which can be time-consuming and prone to errors, AI-powered solutions offer greater speed and precision, enabling users to obtain transcripts in real time or near real time. Moreover, AI transcription technologies are continually evolving, incorporating advanced machine learning algorithms and natural language processing techniques to improve accuracy and comprehension. As these systems analyze more data and encounter diverse speech patterns, accents, and languages, their transcription capabilities become increasingly refined, catering to a wider range of users and scenarios. The impact of AI transcription extends beyond mere convenience. By automating the transcription process, individuals and organizations can unlock new opportunities for productivity, collaboration, and innovation. Researchers, journalists, educators, and professionals across various industries can leverage transcribed content to extract insights, conduct analysis, generate reports, and facilitate knowledge sharing more efficiently. Furthermore, the accessibility features inherent in AI transcription technologies empower individuals with disabilities, including those with hearing impairments, to access and engage with spoken content more effectively. By providing accurate transcriptions of audio content in real time, these tools promote inclusivity and equal access to information, thereby enriching communication and fostering diversity. However, alongside the benefits, the widespread adoption of AI transcription technologies also raises important considerations regarding privacy, data security, and ethical usage. As these systems process sensitive information and personal data, it is essential to implement robust safeguards and adhere to regulatory guidelines to protect user privacy and mitigate potential risks associated with data breaches or misuse.